good afternoon, or good evening. I have no idea what time you're watching this, but I hope that you are enjoying your 420, April 20th being there on Easter Sunday. Hope you enjoyed your long weekend. And I'll make this as quick as I can because I really don't have too much to regurgitate, only because we've been in the same place for quite a long period of time, and this correction is now officially 2 months long. So what I have for you on the screen here is your different ETFs, the XLK, XLV, which I do not cover, so please, if you ask, it is going to take me a bit of time to pull one of these charts up and actually chart it. But these are the S&P earnings going by week, and this week is the official kickoff to earnings. This week is a big week, but next week is the biggest week, followed by May the 8th. So these next 3 weeks are all going to be influenced by earnings quite significantly. I will reduce this, so that we can come on to the other earnings whispers generated image, which they are the greatest, in my opinion, at giving you all of this information. Monday, very quiet day as far as who is reporting earnings. On Tuesday, after the close, it really kicks off with Tesla. Wednesday, at the open, we get Boeing, prior to the open, that is. We used to trade a lot of Chipotle Mexican Grill in years past. We haven't for quite some time. If anybody wants anything on it, please let me know. I will be happy to pull my chart up, as well as IBM, one that was traded a couple of years ago quite often, and I just simply have not followed it because there was a lack of interest from anybody in the room. On Thursday before the open, American Airlines, Freeport-McMoRan, Merck, Southwest, Nokia, Pepsi, NASDAQ. NASDAQ, no, it's not trading the QQQ. Valero, Union Pacific, obviously these are major names as far as requirements for infrastructure. And after the close on Thursday, not that Intel is of any significance, but we get Google. So this is the week that starts kicking it off, and I'm going to kind of run you through here from a couple of different points of view rather than just the standard generic. Nope, I do not want that. I want this. And what I have for you here is the 10-day VIX. I only have it on the 15-minute simply to be able to display what is needing to be seen visually. And as you can see last week, very non-volatile. Very non-volatile. We were down here around 34, 33 with a gap down. Very rare to see a gap down on a Monday. That's why I made a note of it at the beginning of the week. But gap down over the weekend, and we just trotted along. We have not broken down below 28.84. We have not made any significant progress toward that major 2102. However, the volatility has subsided from a view in terms of the VIX. I'll bring you back onto the main screen here because what we're going to go over quickly is the SPX. And the SPX, with last week being OPEX, number one, Friday being our day off, we did have another red week. Another red week over here on the SPX. And before I go back into here, I'll just bring you onto the visual of this with your SPX weekly view, as we were extremely oversold, having touched down to the minus 20% level, traded down there for 23 minutes collectively, spent 4 minutes, if it was not 5 minutes, at that major 23.6 retracement line that I shared with everybody 2 weeks back. We've gone nowhere, which, you know, we don't live in a microwave where things are instant. On the daily chart, again, having been extremely oversold, and again oversold, very much so, on that drop down to 48.35, where we finally got the minus 20% correction. You can see very clearly your 200-day and your 50-day moving average making your bearish death cross. And what I have for you there in the green is what I noted there for you on Friday, which it was mentally there, but it was the spreadsheet that helped me to see it. And what I mean by that is I always track how deep we are for the month and, where are we year over year. And, there was year over year, we spent 3 whole trading sessions negative year over year. And that was how we got our, big bottom there at 48.35. But the year to date and how we had that, it shot out in front of me there on Thursday. Minus 10%. What minus? Where's minus 10% year to date? So go over here to where we started the year out. 5903.26 and calculate where's minus 10%. And what do you know? Pops out right there, right at that 50. What is it? 53.19, something like that. That was what I posted there in the room there on Friday. That, oh yeah, definitely we're heading up for that. So again, you've got your minus 10% correction from the all-time highs, up around 55.32, but you have your minus 10% year to date, which is sitting right there, right around that 53.20 area. And come over here on, we've already been over this, the weekly chart. Or, sorry, this is the daily chart still. Daily chart, clean, bird's eye view, ABC. Very clean, like we've shared multiple times. We can still see this as being the AB, and inside of that AB for the C, the 1, 2, 3, 4, 5, where, like I've mentioned, is very, very risky counting on that 5th wave to the downside, because very rarely do they ever produce. On the weekly, again, very clean, zoomed in view, nothing to distract you. You can see here again how we were counting. We had 1, 2, 3, 4 doji candle, 30-point candle, green. I call that negative, bearish. So 1, 2, 3, 4, call it 5, 6, 7 red weeks in a row. Call it 7. It's not technically 7, but call it 7. Your enormous bounce week that we had 2 weeks prior, and then last week another red week. So what does it tell us? Well, it doesn't necessarily tell you anything, but what we are starting to see last week we had some consecutive gap ups. 78 points there on Monday, 6 points on Tuesday. We gapped down there again there on Wednesday. Happy OPEX. I don't remember specifically what the trigger was there on Wednesday. And then we had here on Thursday your gap up again. But your ranges are starting, we're not going to give it too much credit, but you're starting to get those smaller ranges a little bit back to normal. Definitely less than 100 points, but a little bit back to normal, back to where we can start seeing those. Where was it here? Yeah, your typical 50-point range, 55-point range, a little bit even lower than that, heading down into the high 40s. That's when you know that your volatility has completely been crushed out, and you probably have a much higher probability that the correction is completely over. Come over here quickly onto the spreads. And again, I apologize for taking these risk trades, which may make some people feel uncomfortable. But I name them risks specifically because we are going as close to the price action as we can possibly get in order to be able to get the greatest amount of credit that we can possibly get, which will allow you to roll the trade should you choose to and only absorb a little bit of the credit that you've collected. However, as you've noticed and as you've seen, they tend to pay out quite nice, especially like Thursday's start of the day, 53.15, 53.10, $3 minimum. You closed at 52.82.70, so you took home the entire $3 credit, which $3 credit, for those that don't know, on a $5 spread, that's 150% on your investment or your trade. No safe edges broken because range is compressed. No plus 1%. Missed it by a couple of pennies. 53.28.46, 53.28.31. Couple of pennies. We missed plus 1% buy. And no minus 1% at all yesterday on Thursday. Sorry. QQQ, this is where your problem is. QQQ. Big negative week over there on QQQ, minus 20 points. Big negative week on QQQ. So with earnings coming up, this is obviously going to be where your impact is going to be over on the QQQ. Without having a cleaned up version of the stock chart up there on that, but we can see here since the beginning of this correction began back on the anniversary, the 5-year anniversary of the COVID top. 1, 2, 3, 4, only a 1-point green week, so I call that a negative week. 5, 6, 7 red weeks in a row, call it the big, huge bounce the week prior, and last week you finished down 20 points, which is virtually, call it 5% almost on the QQQ. It's a really bad week, that is, and all of that came there on that Wednesday. So moving on here to the IWM is the one that has been the safest place. The least amount of volatility is all now over in the small caps, the IWM, which you can see over there when we get to the chart. But anyway, the full moon window has completely closed. So what I will be looking for in order to confirm the full moon will going to be a break below 52.20 or a break above 54.59. That's what I'm looking for. Something a breaking of either of those two, and then I can be a little bit more confident and put my white where my gray is on my full moon. So again, with earnings coming up, let's not waste too much time and go right over onto the charts. And I start you out here with just your view on Thursday. Thursday being the 1-day trading session Thursday, 10-day moving average. 10-day, okay, so a couple of people have asked about this, and I'll bring it up here. This is the daily simple moving average, okay? It's not no exponential or any other thing. It's the daily simple moving average. And as you see, it came down there, right there early in the morning, bink, tagged it perfectly, right back up to the 400-day moving average. Again, having noticed that year-to-date correction line, that 53.1293, was where I was talking about the bullish puts, because we are going to be heading for that. We are going to push for Sweet Home Alabama up there at 53.30. We missed it by 1.5 points, 0.69. And then you had your OPEX. The final day of OPEX, the final hour and a half, is where all your volatility comes in. And despite closing green, you had a very nice minus 50-point move to the downside, which is why I can't remember off the top of my head who asked me about buying puts. And I mentioned you want to do that the last hour of the day. And I'm sure that during that last hour of the day, they worked. Actually, here I will zoom out here on a 15-day, just so that you can see. Since that correction began, since that big fucking gap down coming over here on the weekend, April 3 to start the month out, we've kind of not made any progress whatsoever other than getting our minus 20%, which we knew we would get, tagging that big 23.6 retracement down to the 2009 lows for 5 whole minutes, and now we are doing nothing. And that's a perfect scene because we're heading into earnings. From the Elliott wave view that I've continued to regurgitate over and over and over again about, we don't know. We simply do not know where we're at right now. But again, I would suggest very strongly to be careful talking about this being the next move to the downside. Be careful about that. Can see this very cleanly as that almost perfect algorithm, 5-minute visit to the 23.6 retracement to 2009, 22 minutes, 23 minutes total spent in that minus 20% correction area. This could be our C wave completed. This is our wave 1, the big, huge move that we had going back 2 weeks ago on Wednesday. We got our A, a B. Could be that we had our C there, but I wouldn't count that as being a 2. And here is a failed C wave that we are working with, which could easily, like I said, be a 1, 2, 3, 4, where we get a higher low for a 5 and it fails, and that's where we can place our 2, and then we can calculate where our 1, 2, and our 3 would be, which right now I've just simply have it possibly plausibly, which makes a lot of logical sense from a chart point of view for someone who's watched this over and over and been through corrections. Yeah, something up there around that 58.67 area, which, as you know, would bring you damn fucking close. It would actually bring you a positive month of April. Again, on the full moons, gray and gray because no confirmation as of yet. Need to see that confirmation to break up above that 5,400 level, start moving into the 55s, and then can start saying that this is a full moon bottom, which just a blind eye looking at how the full moon visualization works, the full moon tends to be at very significant levels, and that very significant low, it fits. We will see, but it fits. I bring you on here just to the ES, looking at a simple view of the 400-day moving average in blue, how it's just been trolling here for a better part of a week. The 50-day and the 200-day, which made their death cross at the very beginning of the week, over the weekend actually, last week. Nothing, just a very small, even though it is big for somebody who's trading futures, 54.97 down here to 52.50, nice 200 point or 150 point range, but 250 point range. There's not much action or anything which is glowing in the dark, pounding the table, saying, yes, this is the way that we're headed. The NDX as well over here, same thing. Nothing new taking place whatsoever. The QQQ. We have a new gap. We have a new gap that was created there on Wednesday. So we do have a gap over here. And again, the QQQ begins. It starts to begin the process of healing when we are back above 471. 471 is the magic number up here above. This big gap to be filled is at 476. 471 is our major glow-in-the-dark number that once we've recovered above 471, things are starting to look sweeter, safer, volatility starting to dry up and move on. Dia took a big hit over there on the end of the week last week, and that was because you had your big earnings. UNH, big hit in the head. But again, with the Dow Jones, this is the one and only index that did not make a 20% correction. Did not make it. And I'm not saying that it is going to make it. But if you take a look here, which is just really cool, really cool. I'll zoom out here for you a little bit so you can see it all. Our drop, our big drop, which, we were trying to calculate, okay, where's the bottom? And it barely came to minus 10%. Barely came to minus 10%, that first move to the downside. Where did you bounce off of that? Boom, right to the 50 retracement, back to the all-time highs, right over there at 429.40. Failed it, and then the move down started to begin. This recent move to the downside, the move that we had with the correction all over the place, down here to 366.32, the bounce back up, where did it fail? Failed at the 50 retracement. So just from a cool understanding that this really is a video game, it's impossible that they could take the 30 Dow Jones names, put them all together in a bag, shake them up, start pulling them out one by one. This one's up 1%, this one's up 4%, this one's down 9%, and you come out with that exact number right there, that exact pivot. No way in hell. That's why I say this is a video game. And as long as you are, as long as you are actively watching and actively working on your charts, you will start to pick up on this, on how it is a video game. And you don't need to be out there watching what other people are posting on Twitter or CNBC or IWM or Bloomberg. So IWM is what I bring you to here. And again, with the big, humongous correction, virtually touching 3-year lows, down here at 168.69, week and a half ago with the bottom, the enormous spike up on whatever tariff bullshit news that was on Wednesday or whatever it was a week and a half ago Wednesday that gave us that big bounce, which I don't care and I don't want to know. The IWM last week was clean. Absolutely clean. Very clean. You bounce there on Sunday into Monday and all week going nowhere. That's bullish. It ain't bearish, but that's pretty damn bullish holding in this area all week. 184, 187. Very nice. A lot of puts got murdered. So I come back to the original SPX where we are, and again, I still see us heading up into the 5400s. I still see us heading up into the 5550s. I still see us, bring you back over here onto one last time, as we've got about 10 days left in this month. I still see us making a push for that 5600, that green month. I still see it on the table. I don't see it disappearing as of yet. And the earnings that are going to be coming out over the course of the next week and all of next week, which ends on May 1st being the Monday or the Friday, high probability that it could still be on the table. I'm not saying it's going to happen, but I am saying that there is a very good chance for it. So I'll leave you off here with a quick view on where we're at. And like example here, I did Google on the Wide View Wednesday a little more than a month ago, back on April 17th or March 17th or something. And what I was saying there was I can see us still getting another move down to around that 148 level. We got our little spike up here, and your move down not only to 148, but down here into 140, which I didn't have project. Our bounce back up, failing right around the 400-day moving average, just below that 163, and here we are kind of doing nothing. Now, earnings are coming out here on Thursday. I have zero predictions about earnings. I have zero interest ever in holding something for earnings on a short term, like a April, 25th, 26th, the expiration that we have this week, 25. I have no interest on holding April 25 or May 2, anything to do with Google. But if you want to go out to September, you want to go out to July, yeah, sure. You could be looking at that 175 area. Because again, 175, 184, still see that as where we're going to be headed towards. To bring that into context, here's Netflix from Thursday. Thursday, after the market closed, Netflix reports earnings. The first big major name to be reporting earnings. And where are we? We're right back up at 1,000. Somewhere in the chat room, I am pretty sure, I probably posted there, yeah, why not start looking at Netflix, see about, let me see, hang on a second, I am sorry, I'm an old man now. No, April 15th, no, whatever. But yeah, the upside there on Netflix to the 1000s, that really starts to bring in the possibility that we are going to start seeing some upside come on some of these big names that are very oversold that are going to be reporting earnings over the course of the next 2 weeks. Boeing will be reporting earnings, and I only know one person that trades Boeing regularly, size 18. But I still track it because he trades it regularly, so I always have it up on my screen. Very nice, coming down to that 126.31 virtually. But as you see here on a wide view going back to 2016, this is a 10-year weekly chart. It ain't good. What I mean by it ain't good is this isn't something that you want to put into your portfolio and sit on for 20 years. Wide view, still a little bit of question as to what we got going, and I'll bring you here onto my Boeing chart. And you can see we got a lot of detail here on this Boeing chart, but on the zoomed in view, just bring it to a 90-day. We dropped right down to the 2015 three times bottom supported 128. That was the sell-off. 136, we've recovered, which you haven't seen in a while. The 2015 multi-resistance at 148.80, which was virtually your lows back here in mid-March. And here we are climbing up to fill the gap. The gap which fills up here at 170, 169. Up above the 2015 highs, up above the 2016 highs, but still well below the 2017 highs of 185.71, where over the course of 90 days, in fact, we will zoom out here to 180 days. You can see here that this 186 area is a major problem. So be careful with your Boeing ideas of getting anything above 186. Tesla. I believe I can leave us with Tesla. And Tesla, you got a little bit too much detail for you to be able to see here from a regular bird's eye what's going on here. But here's your big sell-off down here to 101, beginning of January 2023. Your nice big bounce, and many of you may remember in the room back here in April, a year ago now, when I was saying you're getting a move to 193. There's no question. That's why I had it here on the screen. And I think I can move into a daily 1 year, and we might be able to see it a little better. But yeah, we had that move down there to 138.80. We are hitting this trend line, major trend line on the bottom. I was saying, okay, we're going to get to 193.81. We were there in 3 days. 3 days we're at 193.81. So this move to the downside, we have not taken out all of the 2024 stuff. We've not even come down into, prior to the Trump elections, October 2023, where you had your big move to the upside and then you had the Trump election rally. So things still look pretty copacetic, holding above 208. Bring you on to Tesla, and it's a little bit too much detail for you on the regular Tesla, so I'll put you back onto the clean and bring you out here into a zoomed in 90-day. And again, death cross on Tesla, just like with everything else. And here we are trolling around, holding above that 208, but still fighting around this 259 level. Me, I like 300. I like 313. 313 is actually one of my favorites. But I like 300. I like 313. And we'll see. We'll see what Tesla's got to report there on Tuesday. And on Wednesday, we'll be able to take action on it. But again, I've mentioned it quite a few times about that upside part in the chat, in wide view, whatever day it was. I like the 300. I like the 313 area. And quite obviously, you've got multiple gaps to the upside, but don't count on those. All right. And that's it. That's pretty much what I got to left over for you here. So nothing, to waste any of your time. No funny jokes or anything, only because I got a couple of things going on over here that I kind of got to take care of. But the sun is now starting to rise. I would like to get outside and check on all of my variations of chili peppers and tend to all of the animals, which are going to be making their beautiful noises in the morning before humans wake up and start destroying that beautiful piece. So enjoy your Sunday, enjoy everything about your day, start your week off on the right path, and hopefully you made somebody smile today. I'll see you guys in the chat room.